Hello traders, welcome back to the channel. Hope you are all doing great. So in this video we will talk about a strategy, a contra strategy. What is a contra strategy, right? If you ask me what is a contra strategy means, we are, let's say in layman terms, I am going long in the market and shorting the market also. Let's assume I have a See, as an option seller, I am always taking, or as you are an option seller, always you are taking non-directional strategy. And why you take a non-directional strategy is to make use of the theta decay if the market doesn't move. But you have taken a non-directional strategy like straddle, strangle, or ratio spread, or any such strategies, and the market is moving, means you will have to make your strategy delta positive or delta negative, or you will have to do some other thing, right? Now what we are going to see in this video is that we will go long in Nifty and short the Bank Nifty. And how we are going to do that is by doing synthetic futures. You know what is synthetic futures? Instead of doing trading directly in futures, you can meditate the futures of futures by doing option strategies, which I am going to show you in this video. Before going that, let me tell you, we have a webinar tomorrow morning around 10 a.m. on ratio spread. We will explain 5 different types of ratio spread, plus we will also see how to manage those ratio spreads. So tomorrow recording is also available. Tomorrow morning exactly at 10 a.m. the webinar will start, for which the link is on the description below. If you want, you can join the webinar. Now let's go to the strategy itself, okay? And last but not least, we have a very good forum where our people write lots of things, lots of stuff regarding to market, lots of things regarding strategy. So if you want, you can join the forum. I'll leave the link on the description below, where we can discuss many things. You can post your strategies, you can discuss about strategies, so on and so forth. So if you want, you can join the forum. I will leave the link in the description below. Right now, coming back to the strategy, if you see the Nifty chart, this is Bank Nifty chart, and I have put a monthly chart. Now if you see the Bank Nifty chart, you can observe that open is around 40,473 and low is around 38,613. So it has moved more than 1,500 in the month of March alone, right? That is Bank Nifty. And if you see the Nifty chart, you can see the same has happened in the month of March. Open is around 17,360, close is around 17,359. It has closed at the same place, but it has moved in between from 17,700. High was around 17,800 and low is 16,800. It has moved 1,000 points, even though it has closed where it started in the month of March. Same is the case for Bank Nifty also. So we are going to construct a strategy where we will go long in Nifty using synthetic futures, and we will short the Bank Nifty using synthetic futures, and you will see the outcome. You will see what is going to be the result. And this same strategy I will post in our forum also. I will update in our forum also how much this strategy is effective, how much you can make money. Now in order to show you how this strategy works, let me first go to Opstra, and I will reset this, and we will select Bank Nifty, right? Nifty, right? Now we will select expiry is 29th March and date is between 1st of March till expiry, right? We will select 1st of March till last of March, which is 30th of March, right? Now on 1st of March, Nifty is around 17,387. Let's assume 17,400. Now we have to go long in Nifty, right? That is our intention, or that is our objective, and we have to go long in Nifty. Now how are we going long in Nifty? We are going long in synthetic future, which means you are meditating the future using options. Now I'll show you. Since the market is at 17,400, what I'm doing is I am buying one lot of let's assume I will buy 10 lots, okay, 10 lots of 17,400 call option, and at the same time 17,400 put option, okay, sell 17,400 put option 10 lots. What I have done, 17,400 call option 10 lots I have bought in March series, and 17,400 put option I have sold in same March series put option. So what I am doing is I am meditating the futures, whatever future is going to give you the same effect this option, this strategy is going to give you. If the market goes on the downside, you will be in loss, and if the market goes on the higher side, it is going to be in profit, right? Now you may ask me, okay, market is, you are going long in Nifty and you are shorting Bank Nifty. If the Nifty is going down and Bank Nifty is also going to go down, because Nifty and Bank Nifty will move in tandem, right? They will move in tandem. Of course, there might be plus minus there and here, but most of the time, 95% of the time, it will move in tandem. Now, what you will have one question: if let's say Nifty is going on the higher side, Nifty will be in profit, but Bank Nifty will start giving you losses, right? So what we are going to do, 17,400 call option and put option I have bought, right? 17,400 call option and put option I have bought. And since I am going long in Bank Nifty, if the market comes down, I'll be in trouble. So what I am doing is I am going and buying 10 lots of 17,350 put option in order to recover the loss in case the market is coming down, right? Now, what it is going to look like is, this is what it is going to look like. Now you may ask me, instead of doing this, you may do a put option, you may sell a put option, right? No, that is not the case. Anyway, you can tweak it as you like, but that is not the case. We are going to do something else. Now what I have done here is 17,400 call option I have bought, 17,400 put option I have sold, and 17,350 put option I have bought, each 10 lots, and this is called synthetic future. And I bought 17,300 put option in order to reduce the losses in case the Nifty is going on the downside, okay? Now I have done this part. Now after doing this, what I am doing is I am going and selling 17,700 put option. How many lots? 10 lots, right? Now if I do this, my strategy is going to look like this. If the market keeps on moving on the higher side, I will be in a profit. Maximum profit is going to be around 83,900. At the same time, if the market is going down, my losses is going to be around 91,000. So my profit is also fixed and my loss is also fixed. Now we will see what is going to happen, or what adjustment we are going to do in this trade, right? Now what we will do, this is the long part, okay? Since as in the starting of the video I told, we are going to go long in Nifty, and we are going to short Bank Nifty using synthetic future. Now we have done synthetic future also, and we have done kind of covered calls also. Or you can say this is kind of looking like a debit spread. But what is the advantage of doing this strategy is, like, you can do adjustment and make it favorable, come out with a profit and make this strategy in favor of you, right? Now what we will do, we have done this strategy. We will see this is the long part. Nifty is the long part. We are going long in Nifty. First we will see Nifty, then we will see shorting part, which is Bank Nifty, okay? Now next day what is going to happen, the strategy is in a profit of 325. I don't have to do anything, and I am continuing this strategy. 3rd March is in a profit of around 3,525. I don't have to do anything. Then this strategy is in a profit of 40,000. I don't have to worry, right? You just observe this one. So make sure you stream this video carefully, fully, so you understand the concept. So on 8th of May, this strategy is in a profit of around 24,000. From 40,000, it has come to around 24,000. So next day, it is in a profit of 42,000. As long as it is in profit, we don't have to worry. We will have to worry when the strategy is keep on started giving you losses. Now what is the thing here? On 10th of March, the strategy is started giving you pain, which means it started giving you profit. So what we have to do is we have to exit the profit, which is the profit giving leg, which is the 17,700 call option, which is in a profit of around 16,000. Now we'll go here. We have sold 17,700 call option, which we sold for around 120 rupees. Now it is trading for around 87 rupees. We will exit this for 87 rupees. Okay. After exiting this for 87 rupees, I will go to P&L. Earlier we sold 17,700 call option. Now we will sell 17,000. Earlier we sold 17,700 call option. Maybe we will sell 17,500 call option now, right? Earlier 17,700, now 17,500 call option, and you can observe here my losses has come down from 91,000. Maximum losses have come down to around 91,000 to around how much? 50,000. Now you imagine what would have happened to Bank Nifty. Bank Nifty trade would be in profit because it is coming down, and here we are trying to reduce the losses. Okay, now you booked we'll talk about that later. Now you have booked a profit of around 16,525 in 17,700 call option, and 17,500 call option is pending. Now we will see what is going to happen on the next day. On the next day, market slightly went up. Still it is in a loss of around 700. We don't have to worry. On 14th of March, again this started giving pain. Market has gone to 17,200, and this strategy is in a loss of around 22,000. Now what we will do, we will exit the strategy. We sold it for around 168. I am talking about 17,500 call option. We sold it for around 168. We will exit it for around 87 rupees. Okay. Once we exit, the payoff graph is going to look something like this, and I am going to go to option chain and 17,700 to 17,500. Now I am selling 17,400 call option, 10 lots. Now my strategy is going to look like this. From 91,000 to 40,000 to around 32,000 maximum loss it has come. Now we will see what is happening to my trade. Now this is the maximum adjustment you can do. After this you cannot do any adjustment at all. Either you have to observe the 30k. Two things can happen here. Either you can book a loss of 32,000 or you can book a loss of around 7,800. Either way, if the market goes on the higher side or lower side, you are going to book the losses only. Okay, we will see what happens. You don't have to panic. 17th of March, market has come to around how much? 17,000, and this strategy is in a loss of around 23,400. We will continue till 23rd of March, 24th of March, 27th of March, 28th of March, and 29th of March. This strategy is in a loss of around 31,000. You imagine 31,000. So this strategy is in your long position. Nifty long is in a loss of around how much? 30,000, 31,000 to be precise. Okay. Now we will reset this one and we will go to Bank Nifty. Okay, I will select from 1st of March till last end of March, which is 30th of March. Okay, and I will select March expiry, which is going to be 29th of March. Bank Nifty spot price on 1st of March is around 40,431. Now you remember we went long in Nifty. Now we have to go short in Nifty, Bank Nifty, right? Spot price is around how much? 40,431. 40,400. Now we will see. We will buy 10 lots of 40,400 PE. 40,400 PE, and we will go long in 40,400 CE, right? Yeah, we bought 40,400 PE and we are selling 40,400 CE, which is equivalent to being a future. now. Okay, now what happens is, if the market goes on the higher side, it is going to start giving trouble to you. So in order to meditate, or in order to reduce the upside losses, we are buying 40,500 10 lots. Okay, then what I'm going to do, market is at around 40,400, let us sell 39,800 put option, maybe 10 lots also we will sell, right? Now what is happening here is, if the market moves on the downside, you are going to make a profit of around 1,15,000. At the same time, if the market goes on the downside, you are going to make a loss of around 59,450. Now we will see what happens to our trade, right? On 2nd of March, this trade is in a profit of 13,000, because your Nifty long was in a profit of around 23,000. Still you will be in a profit of around how much? Maybe 10k or 12k. Next day, 3rd of March, your Bank Nifty short position is in a loss of around 14,000, but your Nifty trade is in a profit of around 30,000. And 6th of March, this trade is in a profit of loss of around 31,000, but your Nifty trade was in a profit of around 41,000. Still you are in a profit of around 10k, because you are long in Nifty and you are short in Bank Nifty. Now what we will do, we will go to previous day. Okay, now since you are in last 14,000, what we will do, we will exit 39,800 call option. Okay, we sold it for around 358 rupees, we will buy it back for around 228 rupees. Okay, we will modify the position, then your payoff graph is going to look something like this. Now I'll go to option chain. Bank Nifty is at 40,923, and earlier we sold 39,800 call option, put option, right? 39,800 put option. Now what we will do, we will sell 40,000 put option. Okay, 10 lots, same 10 lots. Now your strategy is going to look like this. My maximum loss is going to be around 48,000. From 81,000 it has come to around 48,000, and maximum profit also has come down from around 1,15,000 to 76,000. Now we will see what we have done, and we have booked a profit of around 39,800. Now we will go to 6th of March. 6th of March, this strategy is in a loss of around how much? 26,399. But your Nifty long, if you could remember or just rewind and see, was in a profit of around 40,000. So we don't have to do anything here. We will see what happens. On the next day, this trade is in a loss of around 23,000. And next day it is in a loss of around 34,000, because your Bank Nifty trade is in profit. We don't have to calculate. That was in a profit of 40,000, 45,000. This is in a profit of loss of 35,000. So still net you are profitable by 10,000 only. 10,000. Okay. On 10th of March, this trade is in a loss of around 5,000, and next day same, it is in a loss of around 5,000. On next day, 14th of March, this trade is in around 25,000 loss, but that trade would have been in a loss of around how much? 15,000 or 16,000. Your long Nifty would have been in loss, but your short Bank Nifty is in profit. We will continue the same, and we will see what happens. 16th of March, it is in a profit of 49,000. There we are managing the losses, we are reducing the losses, because we were long in Nifty, but here we are short in Nifty and we are making profit here. So even if you had exited now, you would have exited in good profit. Still we will continue, and we will see till 29th of March what has happened. And on 22nd of March, this trade is in a loss of profit of around 12,000, and we will continue. 27,000. 24th it is in a profit of 47,000, and 27th it is in a profit of 54,000. Then 28th of March it is in a profit of around 63,000, and on 29th of March, which is expiry, it is in a profit of around 71,700. There you are in a loss of around how much? for 31,000, still you are making 40,000 rupees profit. So this is the counter trade. So this is how what this is called. This is a contra trade. You go long in Nifty. In our example, we went long in Nifty and we shorted Bank Nifty, and this is how we managed our trade. So you have to see these trades in a different way. You don't have to mingle this. You don't have to see it in a combined strategy. You have to look at a different strategy. You are long in Nifty and you are short in Bank Nifty, or vice versa, so that you can make some profit, right? So we'll also post this real case scenario. We will design the strategy in Sensible, and we will post in our forum also. So in case if you want to check how the strategy works, you can go and check there. I hope you find this video useful. Thank you for watching. If you have any doubts, let me know on the comment section below. Thank you for watching. Take care. Bye.